Hey everyone, it's your favorite Mile High realtor, Aaron McCauley with Keller Williams Realty Urban Elite, and this is At Altitude. All right, everybody, so I am so excited. Today we are doing kind of a little lender chat. We are here in the NFM office with my friend and lender, Ashley. So Ashley, why don't you go ahead and introduce yourself?
Thank you, Aaron. I am Ashley Swenson, as Aaron said, with NFM Lending. Very grateful to be with such an amazing company. I actually just had my 5th anniversary and lots to tell you today, so I'm going to keep it brief about me. I know Aaron wants to educate you guys. It's what I'm all about personally, helping you understand your numbers so you're competent and confident in your home search and making that dream come true of home ownership.
So first things first, Ashley, I really specialize with first-time homebuyers. You guys know that, you know that as well. But a lot of the people who come to me are scared or confused in this current market and have no idea what to do. So what are the 3 things that a first-time homebuyer should be doing right now to get themselves prepared for a competitive market?
Awesome question. Number 1 is definitely make sure you've got your ducks in a row from the financing standpoint. So we have something here at NFM called a soft pull. It's not a hard inquiry, so it's not going to impact your score at all. However, it gives me the chance and the opportunity to see your full credit report, to see if we could optimize terms or how we could establish, maybe the next tier in credit to be able to get payments smaller and buy more house. That would be number 1. Number 2 is you want to make sure that the assets are available. Gifts are allowed. So no matter, like I said, if it's your own saved money or if you have a family member that's able to help, we can also make sure your assets are in check. And it's also to note that you could put as little as 3% down being a first-time homebuyer.
Oh, awesome.
Yes. And then the last thing that I would do is to make sure, of course, that you've partnered yourself with a true negotiator and somebody that's going to work for you to be able to get you under contract. You want a partnership with your realtor, with your lender, to maximize, the strength of your offer.
Yeah, definitely. I think that's one area where a lot of people don't realize is they think that lenders are just kind of the ones who get them the money and that's all they do. But you and I both know that lenders do a lot more. You may not realize that, but they're really kind of my right-hand man as a realtor. They are there making sure the numbers all go through, making sure that it's going to assess and help you kind of make sure that everything's in a row. They're going to tell you, don't buy this, don't buy this, don't buy on credit. They're going to really be there holding your hand, so that way it's not just me walking into a house and she says, yeah, you can afford it, good luck. She's really there alongside me to say, hey, are you doing this? Have they done this yet? Do they have this available? We can get a better interest rate with XYZ. So really a lender is going to be, other than a realtor, your best friend during this whole home buying process.
Yes, for most of us, payment really is what it's all about. And to be able to acquire, for most of us, the largest asset, we want to strategize and make sure that we're meeting your current financial needs, but also having a strategic plan to that way, you're going to be leveraging your cash, especially being a first-time home buyer, to build wealth and create wealth. Last year, unfortunately, with the with what we've seen with the market, and we always do an equity review, I have had buyers out there, first-time home buyers, using down payment assistance programs, putting as little as 3% down that had monthly mortgage insurance, and now they're at a 78% value, so that can get dropped off. So we always are looking to make sure that the right mortgage is currently fitting your needs.
Yeah. One thing you touched on, which I really wanted to kind of talk about too, and I'm glad you brought it up, is that private mortgage insurance, or PMI. A lot of people I talk to, first-time home buyers, they're like terrified of that, and they're like, I don't want that for the 20, 30 years that I have this loan. I don't want to have that extra payment. Can you kind of explain, first off, what is PMI and why would somebody have it? And also, how can we get rid of it much faster than they think?
Absolutely. Excellent question, Aaron. So private mortgage insurance is PMI. And what that is that's offset risk when you don't have a greater payment, a down payment of 20% or more. And so it's tiered based off of how much down, whether it's 5% down or 10% down or 15% down, and then it's also tiered off of credit. So oftentimes what can happen is with conventional financing, once you feel the home's value is 20% or more, then you can go to your servicer. Usually they'll want to get another appraisal to support that value. And then that monthly factor will actually drop off. Again, now you have a principal and interest payment, your taxes, your insurance, and nothing's going out the window.
Yeah, so that's definitely one thing I really have been stressing to people who kind of worry about that is it's not scary. It really is a small number that is added to your mortgage. It's not like a double mortgage payment you're paying. It's just a small fee in order to protect that asset. And then, like she said, you can reassess and have it, if it's below, 80% value, your home to mortgage ratio there, then it drops off. So in Denver's market especially, we're seeing first-time home buyers that they put the 3% down, they have PMI, and less than a year later, they're able to go back, have an assessor come out, and all of a sudden that house is worth so much more that the PMI just drops off and you're down to an even lower monthly payment.
Exactly. And when I have a first conversation with you, I always want to know, what is your ideal monthly payment? What is a max payment? And then we'll reverse engineer those numbers to make sure, even if there is mortgage insurance, how we can make that fit your budget. There's something else that most people aren't aware of called upfront mortgage insurance. So instead of paying it as a monthly, you can have it as a one-time upfront cost that would be included in your closing costs. And so I always will show everybody what those different scenarios and options look like. And you're in the driver's seat. You're the one, telling us exactly what, makes the most sense for you and how you want to structure your loan.
Neither your realtor or your lender, if they're good, will push you into anything. We are here to advocate for you and educate you. Ultimately, the decision is yours. So that's really important that she's able to sit down and do that with you at the beginning, because she just wants to tell you, this is what you have available. If you want to move forward, let's go ahead.
Now, one thing to note as well is that most people think interest rate is going to be the biggest factor and variable to what their payment is going to be. And it's actually property taxes. So property taxes are going to be different if you're over in Green Valley Ranch compared to Denver. So I always like to say, what property are you going to look at? So you know the numbers before you take time of, taking the day off or the afternoon off, and you're already excited about the numbers. So when you go see the house, again, it's just your comfort level's there, and we do everything on the front end. So if that's the house you want to make an offer in, that's where Aaron and I get to work and we make it happen.
Yeah. Now, along with that, getting prepared and making sure that you're really aligned for this market, Ashley, what are the 3 biggest mistakes you see first-time home buyers doing when they're trying to find that perfect house?
Well, of course, the biggest mistake would be not being fully approved. You want to make sure that there's not going to be any alarms that come up once you're under contract and you have earnest money at risk, and you're going to be able to meet the dates and deadlines of the contract. So you want to be able to have a full pre-approval, which is, again, going to also then be how you can act quickly and close quickly. So sometimes the seller doesn't need the highest bid or offer, but they need to close the quickest because they have to move out of state for a new job that starts.
Yep.
So that's where you just really want to make sure that it is a full approval, you've provided documentation, and that you can go, like I said, get under contract and not have any sort of risk of losing earnest money. The other mistake that most first-time home buyers make is, again, they get wrapped up in the interest rate. I would say it's really important to make certain that your payment is going to be, if it's your number one priority, you are going to be able to pick, like I said, exactly how much you offer. You're going to be able to decide what interest rate you want. And so the other thing is just making sure that you are really comfortable with those numbers, because if you are buying, your number one, number two on an offer, and it's $5,000, it's a very nominal difference to your overall down payment and to your payment, or it's a few dollars. So you could actually extend and get the seller to accept your offer if you're in a competitive scenario.
Yeah, and that's definitely on my side. I've seen a lot of homes that now in our market, it's cooled much faster than anybody was anticipating. And so those homes that are under $400,000, which is where most of the first-time buyers I see are priced at, they're sitting. And they have to take price slashes, or they have to negotiate even better, which is great for you, but a lot of them is not cash negotiation, it's terms. People are able to go in and say, well, I can only offer 5 or 10,000 less than asking, but I'm able to close in 21 days to get you out of here instead of a full 30 or 45. Or, hey, I don't move out of my apartment for 2 months, so I'm willing to do a 60-day post-occupancy agreement where the seller gets to still live in the house, but you own it. So really, like she said, those terms are going to be huge. And if you already come in knowing what you're able to buy, knowing where you're sitting financially, and knowing, hey, these are the terms that I can offer with my realtor, you're going to be so much more competitive in this market right now.
Exactly. And the pre-approval process, I think it's really important we make it enjoyable. We make sure that you're understanding every component so that, again, you don't have any uncertainty. I think the other thing people don't realize is that, let's just say you close on October 5th. Your first payment's actually not going to be due until December 1st. So we always want to make sure that we don't, double down on housing payments, so we can, again, set you up for success from the beginning.
Yeah, that's a really big one too, because I think a lot of first-time home buyers especially, they think, well, I have $10,000 right now, so I'm going to put $10,000 down on a house, forgetting that you're going to have that grace period once you take over, and you still also have to pay the closing costs at the table, which are about 1 to 3% of the purchase price of a house for that deal. So just because you have a certain amount of money, you still need to talk to a lender like Ashley, because they're going to say, hey, that's great, this is what it's going to break down to, or, oh, that's awesome, here's what your payments can look like, here's when that starts, are you able to get more money? They're really going to work with you, because none of us want to see you fail. Nobody wants to see a house that they helped you go into foreclosure, or you have to turn right around and try to sell it even if it's at a loss. Like, we want you to be successful. This is, like she said, the biggest asset most people will ever buy. So we want to make sure that it's right for you, it's going to be a great fit, and that you're not having to live on cup of noodles for the next 5 years to afford it.
Exactly. Yes, we have guidelines around that as well, so we have to abide by those. But there are some great tools that, again, I'm happy to share with you if you want to get a personalized or custom idea of where you're at, and it also could provide as a roadmap. And so if you have the conversation today, it might not be something that is going to happen within the next 12 months, but you'll at least be that much more prepared, have that much more of an enjoyable experience, and I always say the house finds you. So you never know when the stars align and the dream becomes a reality.
Well, that's awesome, Ashley. So with everything you've kind of explained so far, I definitely, of course, she's my preferred lender, but I would never force you to work with anyone, but you would be foolish if you didn't work with her. So how can someone get a hold of you? Because really, don't contact a realtor first, get a hold of a lender and get going on that process first, and then call a realtor. So how can they get a hold of you to look at what their finances are?
The best way to get a hold of me is on my cell phone. So I, can be reached at 720-737-7010. Again, that's 720-737-7010. Phone, text, I'll reply to anything. And then, of course, my email, which is aswenson, so that's ASWENSON, at N as in Nancy, F as in Frank, M as in Mary, lending.com. So that's aswenson at nfmlending.com. I look forward to hearing from y'all soon.
Awesome. Thank you so much for doing this, Ashley.
Thank
I've
you.
been so excited to get you on here, especially for all my first-time home buyers that have those finance questions. And like I said, reach out to me at any time with any questions that you have, but get a hold of Ashley first if you are serious about getting that asset right now before it goes through the roof in the next few years with this Denver market. Okay, guys? Thanks so much for tuning in. We'll see you next week for a really awesome first-time homebuyer walkthrough Wednesday. Bye.